Will the stock market crash come again? I'll answer that question, plus my regular weekly market analysis, the day trade of the week, and a market scan in search of opportunity, all coming up in this week's Stockscores Market Minutes. So a lot of people are thinking that a stock market crash is more than overdue. Since March, we've had a market that's gone straight up. And despite all of the negativity in the economy, in the media, that sort of thing, the market has managed to make considerable gains over the past few months. And that has many people thinking that we are overdue for yet another market crash. Well, there is no sign of weakness yet. And I've been a bull on the market since late March, and I continue to be a bull on the market. However, I have a certain amount of caution right now. And the reason is because of one of my most basic rules, and that is when a market or a stock rallies into resistance, they almost always get stuck at resistance. And the market now has been going up for a few months and is coming back to the all-time highs. And when it gets there, it is likely that it will face a wall of sellers. And so what we want to do as traders is watch for a breakdown because it could come any day. Now again, I want to stress there is no sign of weakness yet. I am still bullish on stocks, and you'll see that when we do our analysis this week. But I know that when markets rally into resistance, it is often the case that they get stuck there. And so what you want to watch for are breaks of upward trend lines. Now, when we jump to the analysis of the S&P 500 and the Russell 2000 and the Canadian markets in just a moment, you will see what I mean by an upward trend line, and I'll show you what a break of an upward trend line looks like. Well, now's a great time to subscribe to the channel. I put out these videos every week, free analysis on the markets, so hit the subscribe button, hit the like button if you're enjoying the video. And let's now jump into this week's stock market analysis, starting us off with the S&P 500, symbol SPY. So here's the 30-day, 60-minute chart, and you can see that the market is in an upward trend. That's why I remain a bull. Just don't fight the trend, no matter how negative you may think the media is or the economy might be. If the market is going up from left to right, you got to stick with it. So what we have here is the upward trend line. We've also got this more shallow upward trend line. And because the prices are running up and away from the trend, there is a greater chance that we will see a pullback soon. There's really no sign of it. But if we start to break down through these rising bottoms, then that will be the first sign of weakness. Ultimately, I'll get concerned when we start to break down through this longer term upward trend line. But let's jump to the weekly chart. And here you will see what I was talking about at the top of the video, a market that went straight down and has been steadily climbing ever since and is now coming back to those old highs just around 340 on the SPY, which of course represents the S&P 500. Now, we've had a good couple of weeks to the upside. We could have one more good week, but when we hit this mark here, it is very likely that the sellers will come out. And at that point, we really want to watch for a break of the upward trend line. So if we break this upward trend line from a falling top, then I want you to get defensive with stocks. Now, typically, markets have a pullback in the fall. September, October, there is often another crash. And I think that is probably going to be the timing, because if you think we've got another 1 or 2 weeks of upside till we hit resistance, then we go sideways for a little bit. Then if we start to build falling tops and start to break those upward trend lines, then we'll need to get defensive with our positions. So if you are long of stocks, stick with them, but dance close to the exit door and look for exit signals if the market itself starts to break down. Taking a look at the Russell 2000, you can see the small caps are starting to play catch up. They have underperformed the large caps, but we did have a little breakout from this pennant pattern last week, and that points to the market heading back to its all-time highs as well. It's got a fair amount of upside. So I think we've still got another 1, 2, maybe even 3 weeks of positive potential performance here in the small cap stocks. However, If we get a break of upward trend lines, then we will get defensive, and I'll keep you updated each week. Moving along to the Canadian markets, and here is the chart of the TSX 60 on a 30-day, 60-minute time frame, and you can see that the bottoms are rising from left to right. The buyers are in control. Whoops, the upward trend line is in place. And so until that is broken, just remain on the buy side. But remember, if we start to break down through support, start to break upward trend lines, then we'll get defensive. On the longer term weekly chart, this is a 3-year weekly chart. We've got lots of upside until we hit the all-time highs, certainly more upside than the S&P 500 has. And so I remain on the bullish side, but I will watch for any exit signals. Looking at the TSX Venture, again, heavily dependent upon the mining sector. And of course, with gold having a lot of strength, this market has done very well the last 3 or 4 months, and it still looks like it's good. There's no break of the upward trend line. You can see that the upward trend line kind of looks like that. Now it's getting a little bit steeper. But until that starts to break down, I would remain a bull on the microcap stocks in Canada. On to commodities. Let's take a look at that gold chart. And this is always worrisome anytime a chart goes parabolic. And by that I mean the trend has gone from being linear to getting steeper and steeper and is now a parabolic curve up and away from the trend line. And that is usually the final phase of a topping out process. So watch gold very carefully. If we hit a new high and close below the open, which will be a red candle, kind of like this, and we are far above this linear upward trend line, then I think there's a good chance we will see a pullback in gold. And again, I'll keep you updated. Just make sure you subscribe to the channel and I will give you my analysis each week. Moving along to oil. Oil started to show a little bit of strength last week. You can see that we broke to some local highs after being in this tight trading range the last couple of months. However, it was on very light volume. You can see not a lot of volume there, not a lot of enthusiasm. So it's sort of an early phase of perhaps a turnaround in oil, but I think there is still a lot of work to be done. And my sense is, maybe take a couple nibbles in the sector, but certainly not a whole bite because the market chart here is not yet that great. On to the fear chart, and you can see fear is falling, but it is still elevated from where it was. But as long as we're in a downward trend, the market is relatively confident. You could maybe argue complacent as the market is overdue for a pullback, but there is no sign of a market pullback and there is no sign of fear yet, so remain on the buy side, but again, with some caution. So my ratings then, neutral on the US market long-term simply because we are coming into that long-term resistance area. But bullish short-term, we are in an upward trend. Same ratings for the Canadian market. Gold, bullish on both time frames, but gold is very risky because that trend is going parabolic. Oil, neutral on both time frames. A little bit of a sign of life on oil, but still work to be done. Stock markets continue to move higher, but the volume is light. We are in a summer trading atmosphere, and that is always the case. We get light volume in the summer. Now remember, resistance is approaching. We may get stuck there. Markets that rally into resistance usually get stuck at resistance. So there is a good chance we will see a reversal soon. Gold remains strong, but it is getting emotionally overbought. We can always see emotion in a market when we have that parabolic curve to the upside. Oil is perking up and fear is falling. All right, let's now take a look at the day trade of the week, and this always just to emphasize the methodology that I use. And this week's day trade of the week is on AMC, which made its action candle right there, which is great, and it was a nice little buy signal. But what I want to emphasize with this one is sometimes you don't know when these things are going to work. And this particular stock went sideways for the following 3-4 hours. You can see it there. It didn't really do anything. But it also didn't move down through support. Support was right there, the last inflection point low before the entry candle. Now later in the day, it came alive. It showed its first sign of life in the morning, and it went nowhere for a few hours, but it didn't give us a sell signal, and then it made that big run to the upside very quickly. In this particular trade, for $100 of risk, you would buy 1,100 shares, which required $4,380 of capital. The margin requirement would be $1,460 because, of course, when you're day trading, you only have to put up 1/3 of the capital. At the end of the day, we had a 3.7 reward for risk ratio, although it did hit just about 9 during the day. At the close, that was a $370 profit, a 25% return on the capital required if you were able to use margin. That's a great one-day hold. So now we'll go on to the Stockscores Market Scan, where we can search for opportunities using the Stockscores Market Scan tool available to members of Stockscores. And what it allows us to do is filter through the entire North American stock market in search of stocks doing any number of things. We have all kinds of filters on the screen there. You can see them all. But what we're going to do is use one of the preset scans called the Abnormal Break US, which is one of my favorite scans right now. It seeks stocks making abnormal price moves with strong volume, which of course is a great signal that something is going on. Now we always have to take a look at the charts. And so in this case, I have the charts organized by price with the lowest price coming up first. And as I cycle down through the charts, I'm looking for patterns where we see an abnormal break from low price volatility. So for example, MBII has been trending sideways for 2 or 3 months. It came alive on Friday. It's got some good volume. This is a pattern called a cup and handle pattern. Here you've got a cup and then a handle, and over on the right side we are breaking out of the handle. It's quite a predictive pattern. What we then want to do though is also take a look at the 3-year weekly chart. So I can do that by clicking on the little 3Y, and I get the longer term view of that stock. And in this case it looks pretty good. We've got a downward trend line that is being broken from a rising bottom. Volume on the weekly is a little light, summer volume. We're also going to run into an issue here where the stock traded a lot of volume at around the $1.50 to $1.75 level. And that is going to limit its upside because all of these people that own the stock at that price, when it gets back there, they're going to want to sell into strength. So I like the chart more so on the daily than I do on the weekly. I would give this a 6.5 out of 10. I just keep cycling through looking for patterns. Here's another one, LMFA. You can see a little spike in price. This is called a pennant pattern. Pretty good, but again, there's going to be quite a bit of resistance at $2. And so I would give this a 6 out of 10, which essentially means I think it has a 60% chance of being a profitable trade. Here is RHE. You can see a little bit of life. When I look at the 3-year weekly, however, I see quite a bit of noise over here. Volume wasn't that awesome on the short-term chart. You can see that the volume right there wasn't all that strong. I really like strong volume. It indicates that a crowd is gathering. It's all chasing after that stock, and that can really be what propels a stock higher. So we keep moving on. Don't particularly like that one enough. OPGN. Good stock. It was a great day trader on Friday. And the reason it kind of fizzled out into the close is it hit resistance on the daily. You can see that it had resistance back here, right about in this range. It went up through it during the day, but then it came back to close below it. And that tells us that there is a wall of sellers in that $4 price range. And I think that limits its upside near term. So I like the abnormal activity on the stock on Friday. And I think it's got some good potential, but it's not perfect. And so I would give this one a 6 out of 10. Now, this is something I do every day for my readers who can subscribe to my daily newsletter and email trade alerts at tradescores.com, my other website, tradescores.com. And essentially, I run these market scans about an hour before the close, and I will email you or send you a text message with anything that I think has some pretty good potential, doing the process that you see me doing here, except I'm doing it before the market closes. And anytime I see something that I like, I send out a trade alert. So continue along. And again, that's at tradescores.com, my other website. Keep moving along here. Let's see if there's anything else that I like. We'll do this as the last page just so the video doesn't get too long. But this PACB has some decent potential on the daily. The weekly, yeah, I'm going to give this one a 6 out of 10. It's not quite awesome. AMC was the day trade of the week, but the longer term chart is not awesome. Just keep on moving along. ACER is going to get stuck at resistance at $6. So we'll pass on that one. TrueCar, this is one of the stocks that I featured in that Stockscores daily newsletter. I featured it back here when it came alive with abnormal activity from low volatility. That was under $3.50. Now the stock's, well, it hit $6 just a week and a half later. So would I buy it now? No, it's too late. The party has already started, and if you're not in that stock already, it's too late. Finish these charts up, and then we'll wrap things up for this week. And I think that's about it. This Luna looks not bad, breaking a downward trend line. Let's just take a look at that on the 3-year. Yeah, I give this a 6 out of 10. Don't think it's stupendous. All right. Well, that has been the Stockscores Market Minutes for August 10th, 2020. Hope that you've enjoyed it. Again, please subscribe to the channel, leave a comment, and if you've enjoyed the video, click on that thumbs up button. It always helps this video get watched by more people. But most importantly, trade well.